Most people think that making money is the most important part in achieving a financially successful lifestyle. The most important piece to this puzzle is that once you make it, what are you going to do with it? You can only do 3 things with money. 1. Spend it. 2. Save it. 3. Invest it. Most people never get financially ahead because of their lack of financial education. The 3 biggest mistakes that people make with their money are 1. Poor spending habits with their money. They purchase too many liabilities, which is buying too many consumer goods. 2. Leaving money in a savings account. Not having their money work harder than they do and having it dwindle away due to inflation. 3. Investing their money by turning it over to financial planners. It's not what you make that counts, it's what you keep. Our money habits are based on choices that we've made. Lower income earners make money and spend it all on living expenses. Middle income earners get jobs that pay them a salary. This automatically puts them in a higher tax bracket. Less money comes into the household, and many times they are forced to take out loans for life's events. They purchase liabilities and put any extra income into their company-sponsored retirement plans like 401ks. Eventual taxes and management fees erode a good portion of their 401k, and hopefully there isn't a stock market crash that can erase years of savings. Upper income earners make money primarily through building a business and then buying assets. Assets are things that make money through passive income and appreciate over time. Their money works for them. They follow the pyramid of money to scale their wealth. Earn business, save through tax deductions, scale and develop skills to grow their business, invest in assets that will provide passive income and appreciation, and secure. Cash flow goes into alternative retirement accounts. Here's a classic example of how 3 different categories of people use money in their lives. 1. Borrowers. They borrow money for big purchases. They work to spend money on their lifestyle and always pay interest. They typically don't have enough money to save. They repay the loan with future income. They are always working to get back to zero. 2. Savers. They save for big expenses. They are no better than borrowers. They save and then deplete their savings, return to zero, and then save up again for the next big purchase. They never get ahead. 3. Wealth generators. They save as much money as possible and use collateralized loans when they need to make big purchases. This way, their principal remains untouched in their accounts. This is a key strategy for the wealthy. Your principal is gaining compounding interest while your loan repayment is paid back through simple interest. 4 things to look for in financial plans and retirement accounts. 1. Safety. 2. Liquidity. 3. Rate of return. 4. Taxation. Most people rely on the traditional financial accounts: savings account, qualified account, and stock portfolio. However, they don't meet all 4 criteria. But there is hope for the middle income earners. There is a better and more efficient alternative to the 401k that could place you on the right path to true financial planning and eventual financial freedom. There is a safer place to store, leverage, and grow your capital. The best part is that you can have access to your money. Unlike traditional retirement plans where you don't have access to your money until you're nearly 60, this plan allows you to access your money once your account is funded. It's no longer held hostage to some future date. There is no more risk of losing value, like typical retirement plans that your company invests in with your 401k plan. Are you ready to take more control of your life and money? This alternative strategy allows you to take every after-tax dollar and let it grow tax-free and risk-free from institutions nearly 200 years old. The idea is to pay taxes on the seed and not on the harvest. In other words, pay your taxes when your money is at the growth stage and not at the end when it's fully matured. Next, leverage your tax-free dollars into profitable investments and begin to build generational wealth. What is the alternative to 401k? It's high cash value, dividend-paying whole life insurance. Whole life insurance is the only vehicle that meets all 4 criteria. It grows tax-free and you can use it tax-free, and you can pass it on to your heirs tax-free. This is how you create a legacy and generate generational wealth for you and your family. This is one of the best financial tools available. We are essentially doing what the banks do. They invest heavily in life insurance. With its flexible uses and flexible repayment terms, you are in control. You have essentially become your own bank. Each company that has these types of policies has been profitable for over a century. It offers safety and liquidity. It's available for you whenever you need it, without credit checks or any hassles. It's your money without any restrictions. Use your money to reduce debt owed to the bank so that you will control the flow of money and make the best decision of when and where to put your money to work by making smart investments. You're securing your earned money. This is level 4 on the pyramid of money, secure. Whole life insurance is the vehicle we use to warehouse our cash. We use mutual insurance companies which are outside of Wall Street's control and owned by the policyholders, which is you. Whole life insurance offers privacy and asset protection from the government and lawsuits. It offers a death benefit to your family. Whole life insurance avoids Wall Street, government, and banks and allows you to create your own financial system. This plan protects your money and allows you to utilize it at the same time. This is also known as an and one asset. In basketball, if you make the shot and get fouled at the same time, you get to keep the points for making the basket, and you also get to shoot a free throw for possible additional points. Essentially, your money works in two places. The principal grows annually with compound interest, while you're able to borrow the money with the principal untouched while being able to invest in other income-producing assets. Here's an example. $100,000 earns 4 to 5% compound interest yearly. Borrow $100,000 at the same time and use it for business or personal use while the $100,000 principal remains growing untouched. This is done through a collateralized loan from your policy. It's money working in two places. You stay on the wealth curve for the rest of your life. This is what the wealthiest families in America have done for generations to protect and grow their wealth. Walt Disney, John Rockefeller, J.C. Penney, Ray Kroc, to name a few. Life insurance offers 6 things to set you on your path to financial freedom. 1. Control. 2. Flexibility. 3. Liquidity. 4. Compound interest growth. 5. Tax-free. 6. Death benefit. Whole life insurance is the best retirement strategy to capture and control your money that flows through your personal economy while still having access and control. It becomes a forced savings account. It's protected against taxation and protection from lawsuits and creditors. It has never lost money and has always paid an annual dividend. It offers stability and safety. You earn 3 to 5% on principal. You can borrow money at 70 to 90%. LTV ratio with a collateral loan, meaning the principal remains untouched, growing and compounding at 3 to 5% annually. The borrowing cost is at 1 to 3%. Use your money to pay off debt or to buy liabilities such as a house, student loans, car, etc. The most efficient use of the money is to invest in assets making 8 to 12%. An interesting fact is that the banks are the largest purchasers of cash value life insurance in the United States. Model the banks. Remember, success leaves clues. All we have to do is follow the proven path to success. Join us at Mason Institute to learn how to implement this strategy into your personal economy and begin to use and secure money for yourself and generations to come.